most people just say it has to crash. It has to crash. Of course it's going to. How can it continue to go on like this? And the point I want to bring to the table is that it can go on like this as long as the government continues to allow it to go on like this. I don't think that this government's going to try and do anything about it. Nothing major anyhow, but we have a serious new player in the game, and it's inflation more or less across the board. Everybody who lived through the 20+% interest rates says the government will never do that again. That can never happen again. It crippled everybody and everything. And the thing is that the inflation at that point in time was so close to what the interest rate was that they had to go that high to slow things down. And inflation is starting to get out of control. And unfortunately, one of the only levers the government has to get ahead of that inflation and stop the price of everything from continuing to rise so rapidly is the interest rate. How are you guys? It's Mitch Cleary here from Century 21 in Peterborough. It's been a while since I put out one of these videos. My apologies to anybody who is watching somewhat regularly and has been missing the market updates. It's just been so busy here. I totally lost the ability to keep up with these videos and continue to service clients. We've had an inordinarily busy start to the year, and I'm going to show you some statistics in a minute to walk you through what's happening in this market right now and what's happened in the last couple of months. So I also want to mention, as I really do like getting these videos out, and I know there's some people who like watching them on a more regular basis. You'll notice today I'm not in any sort of dress clothes. I'm in the hoodie. It's Friday. I'm basically wrapped up for the day, and I just wanted to get this out to you guys. So I just wanted to say I'm going to try and change my format a little bit. These videos might not be edited as well. I might not cut out some of the parts where I misspeak as frequently. And here I am, I'm wearing a hoodie instead of some dress clothes. So I'm going to try and dumb down the quality a little bit in exchange for a better frequency of the videos. So if you guys can watch the videos like this, I'm going to hope I can keep putting them out. So anyhow, let's get into the stats. So in April, things seemed to slow down a little bit in terms of the blinding pace and crash of buyers that we had coming into the market. And we did see what felt like a lot of buyers locally here taking profits. These prices just have had everybody in awe of what's happening, and a lot of people who own multiple properties are taking a chance to sell one of them, sell an investment property, or people who own a cottage and a house, sell the house, move to the cottage, and or people who have big estate style properties, anything they're looking to downsize, empty nesters. Now's the time, sell this thing. You can rent if you have to. A lot of people sort of that had been waiting for the spring, they came to the market and capitalized on great prices. The buyer demand seemed to taper off just a little bit. So we did actually see a reversion of the average price in April from March. So just a little tick downward, didn't quite keep up that trend that was going steadily cruising into the $600,000 average price range. But the inventory has continued to be beaten back down, and it remains at about a half a month. So we're still not in a great spot. And as of the date that I'm shooting this video, I believe we're May 27th. This week already after the long weekend feels like things have just returned to their blistering pace. The buyers have seemed to be back in full force after the long weekend. Seen a couple of 20 plus offer scenarios on listings this week. Absolutely crazy over asking prices. And already starting to see days on our system where I log in and it's not every day now, not more new listings than sales. It's starting to be almost dead even most days, or we're seeing more sales than listings happening. So we know that inventory is, even as low as it already is, it's starting to shrink again. So right now, if we don't see something change and the trend keeps going that way, which I don't think it necessarily will right away, then we're going to end up back in a situation like we were in the first 3 months of the year, where you look on your screen on Realtor.ca and there's 30 active listings. So within your price bracket, there's only a few, and that's when the real froth and feeding frenzy starts to happen on these prices. So I'm going to jump onto a couple of points that we see happening right now within the market, and then I'm going to take sort of the broader view about what's going on. First, I'm going to talk locally here. So I mentioned that things leveled out a little bit in April, and so far in May, we're right at the end of May, and I'm going off the gut feel in May right now, is that things towards the end of it as well have started to ramp back up just at the very end. And a couple of things in the market that are worth just noting of interest is that we continue to see bungalow product command a premium, because in any case that you can have a secondary income source where you can have a basement apartment, it's absolutely sought after in this environment where all local wage earners have been totally priced out. A lot of people can only afford to buy if they can get some secondary income. So like in kind, two-story product versus bungalow, the bungalows are commanding a premium, and likewise split levels have kind of taken a back seat in terms of competitiveness, because often the 3-4 level split, doesn't matter which way you shake it up, they're not as easily accommodating secondary income sources. So bungalows are kind of the king right now in terms of commanding the real best bang for the buck, but everything across the board is still getting absolutely ridiculous prices compared to a year prior, even 4 months prior. So I want to move on to the what's next from here. It sounds like so many buyers are totally fatigued. The weather's starting to get nice. A lot of people are really ready for a breather, and the last thing they want to do when we're finally having some 20 plus degree days with lots of sun is go and continue to look at their 50th house and put in their 10th offer. So I think a lot of people are ready for a break on the buying side. So I think that as the weather does get better and people try and capitalize on having some bit of a summer here, that we are going to see just the seasonal slowdown in purchases. And we've already had such a blinding rate of transactions happen already this year. It would suggest that we have gotten a lot of this year's activity out of the way, and that we might have a bit of a slow summer here. Which might be a real blessing for some. So after that, what's next? What's next in the next 6 months, the year, and onward? I'm going to cover a couple of points that I've covered in previous videos because they're still valid and they need to be reiterated. But I also want to bring up the entrant of a new player in the game, which in my mind is probably the biggest wild card right now in terms of what's going to happen, and that is our friend inflation, and relatively high inflation across lots of categories. So let me jump to this point here. Question is, right now, where does anybody park their money and find any reasonably safe rate of return? And this is an argument for why the demand is going to continue, just in terms of things that are totally out of the control, or not totally, but mostly out of control of the government at this point. And if you have any form of savings and are looking to do something to keep that money moving, and there's lots of money looking to land somewhere right now. There's all kinds of retirees with their nest egg. There is institutional money looking to land somewhere. There's foreign money looking to land somewhere. And when the interest rate is basically zero, or it's negative to inflation, there's no debt, asset class products that are going to give you any kind of return. There's no safe rate of return on anything right now that's going to outpace it or even come close to keeping up with inflation. So you're holding some sort of savings account or any kind of debt product, even holding second mortgages and stuff right now, you're likely not going to outpace inflation. So big money is looking for somewhere to land. Everybody's saying that the stock market is overvalued in most areas. The whole crypto boom and right now a little bit of a sell-off, and then likely it's going to be a resurgence. There's so much money in the world right now looking for somewhere to land where it can achieve a rate of return somewhat risk-free, or at least to offset the risk that's encountered. And I think that real estate still looks pretty good in that scale of your options out there. Overvaluated equity assets, there's no bond market, or any kind of a debt product, you're not outpacing inflation right now. So where do you put it? it ever feels like everybody. I'm getting calls all the time from people who both invest in real estate and in stocks, and everyone's saying I have too much money in crypto. I got to put it into something else, and all they can see is real estate. So I do think that money is still going to continue to keep flowing into real estate, even though we do have some buyer fatigue going on right now. But on to the bigger point right now is that I think that most of the levers to be controlled here about what's going to happen next, most people just say it has to crash. It has to crash. Of course it's going to. How can it continue to go on like this? And the point I want to bring to the table is that it can go on like this as long as the government continues to allow it to go on like this, because so many of the factors that are at play are based off of government policies. So I want to say that the government largely holds the fate of this market in its hands, and we need to continue to watch immigration policies, government stimulus, and interest rate signaling to sort of guide, and also on the supply side, what the government's going to do to loosen any restrictions or supply new supply to the market themselves, which we know is probably not going to work. But so the mega factors behind what's driving us here: ultra low interest rates, very high immigration. We have the GTA exodus into areas like ours, and we have a preference of people to go all in on housing right now because during COVID, they know they're not traveling. They're spending so much more time at home. They want a yard. And just in general, they can't spend money at bars, on trips, any type of recreational activities that you used to be able to do. So they have so much, they're just shoving, they're going, I'm all in on housing. And we're seeing that trend may continue, but the government has control over the immigration, the interest rates, and the stimulus, and also in a large way the supply, because if they wanted to loosen up their ability to get approvals done, even though that's a somewhat slow turnaround, it could be done. So realistically, the thing is that the government can control what's going to happen here. So the only thing as a consumer in this market, if you're trying to ask yourself, is this safe? Should I buy right now, or should I sell right now? Or is this market going to continue to run up? Should I wait before I sell? Are the profits going to be higher? Should I wait before I buy? Is it going to go backwards? And what I want to say is that right now, this current government is not going to want to do, and they have signaled that they are not planning to do anything that resembles a risk of slowing and potentially crashing this market anywhere near an election. We could be 2 years away from the next election, but there's rumors that there could be one called as early as October, given how much circumstances have changed since our election a couple of years ago, and a massively generous liberal budget that was just proposed, and so I think that we look at a government that is not going to really want to rock the boat. They would rather have housing prices continuing to rise and try and make minor adjustments to stress testing and whatnot to try and signal that they're making moves or make their case that they've made some adjustments to slow down the market. And they really don't want anything drastic to happen, because the risk of it going into decline so close to when their reputation might be on the chopping block is just not worth the risk. They'd rather just see prices continue to go up, because in general it's bringing more money into the economy, and aside from the first-time buyers and millennials that have been sort of knocked out of the housing market, there's a lot of people that are pretty happy with the new price of their house and how much equity they have. But so the biggest thing is that I don't think that this government's going to try and do anything about it. Nothing major anyhow, but we have a serious new player in the game, and it's inflation more or less across the board. Now, the reports that are coming out about inflation right now, most people would suggest that they are somewhat muffling what's actually happening out there in terms of the real inflation that's going on, and also that they're trying to label it as transitory, meaning that because we had such a change in prices from, we're coming out of a year-over-year comparison where last year things were so slow because of the lockdowns that, of course, prices are up now. But look, we've got the most difficult time to bring product of any kind to a market right now. You have all types of factories, every type of labor force is being muted and subdued. Factories where you used to have 6 people working in one spot, now you have 2 or 3. So every type of widget, vehicle, food product that someone's trying to bring to the market right now, they're having difficulty doing it at the same pace that they used to. And this is happening at the exact same time that so much stimulus is being thrown at the market. So you have the supply for all types of goods being hampered. It's lower than usual. And you have as much or more money floating around in the economy trying to chase these limited goods and resources than ever. The price of everything is going up rapidly. We have, of course, the lumber shortages and price increases. A lot of reports saying up almost 4-fold in recent months. I saw something just this week that said that lumber prices in the U.S. since 2016 are up almost 600%. So we have lumber, we have copper is almost doubled from last year. We have aluminum, we have steel. All these commodities going crazy. We have all of your groceries, and because of all of these other major inputs and the commodities rising in prices, we have used vehicles going up. We have recreational vehicles going up. I just bought basically a floaty kids pool for the backyard that a family member of mine bought the exact same one last year for less than half the price. It's hard to argue how any individual part or piece of this particular product, it's mostly made of plastic, has gone up that much over none of these inputs. There was no copper, there was no steel, there was no lumber in this pool, and it's more than doubled in a year in price. And so we have that across the board. I heard a story recently, just some friends that we were talking to last weekend. He bought a boat nearly 10 years ago. This is a fishing boat, a bass boat. Bought a boat about 10 years ago. Just sold it this year for $10,000 more than he bought it for 10 years prior. This is inflation that's large enough that it's flipping the basic story of the rich dad, poor dad fundamentals on its head. You don't own liabilities like boats and cars. Invest in things that pay you dividends or pay you money. We have every type of asset starting to rise in price so quickly that what is happening is exactly like what happened in the 80s. And everybody who lived through the 20+% interest rates says the government will never do that again. That can never happen again. It crippled everybody and everything. And the thing is that the inflation at that point in time was so close to what the interest rate was that they had to go that high to slow things down. And inflation is starting to get out of control. And unfortunately, one of the only levers the government has to get ahead of that inflation and stop the price of everything from continuing to rise so rapidly is the interest rate. Now, the government has said that originally they were not going to touch the interest rate until early 2023. Or no major moves. They've said in the last few months that they might move that to mid-2022. Now, if inflation continues this fast across all product classes of all consumables and basically anything you can dream up, the price continues to rise as fast as it's done with our real estate market. Unfortunately, the discussion of raising the interest rate will almost become non-negotiable. And that is just not good news for anything, including the real estate market. So as much as I don't think our government wants to do anything to slow this down or risk any damages right now, I don't know how long they can continue to sort of muffle the inflation message out there right now and continue to watch the price of virtually everything rise at blinding speeds before they have no choice but to raise interest rates at a rate that's more than what any recent homeowner is comfortable with. Now, there's no government policy out there that's palatable that might see prices drop, 10+% in a year. Nobody's going to go for that because it's everybody who bought in the last year will be turned upside down. But we are going to be eventually put in between a rock and a hard place here, and this, for me, is the biggest thing. Up until this point, it has been totally go, go, go. There's no end in sight for this. And I still think that in the short term, it's just going to continue to keep running. But there's going to come a point in time where, unfortunately, if this inflation doesn't slow down, then the interest rate could be a major issue here. And if anybody thinks I'm wrong, I really want to hear the counter arguments, because this is something that's starting to concern me. And so my current prediction is, yes, our market's going to continue to, I think we might have a relatively flat summer, but all things being equal, it's going to continue to rise, if nothing else. And towards the end of the summer, I think we're going to continue at a rather rapid pace of appreciation. But we do have a new looming enemy in the picture, and we need to watch it closely to see what the government signals that they are going to do. So anyhow, that's it. Thanks, guys. Hopefully this was somewhat helpful. Let me know if you found this format any better or worse, because I might have rambled a bit there, and normally I would cut some of the stuff out, but I'm just going to leave it in there in the hopes of being able to make the time for me to produce these videos a bit less for you guys and get them out a little bit more frequently. So I hope everyone has a great weekend, and I'll look forward to chatting with you guys down in the comments. Take care, guys.